You are listening to ChartingWealth.com for Friday, the 8th of July, 2016. What do we see going on in the market? Well, we always start with IYY, which is the symbol for the iShares Dow Jones U.S. Total Market Index Fund. It's an ETF that tracks the entire stock market. Where is it? Well, the market has been stalled now for 3 two-day candles. That is 6 days, right around the $104.17 mark. We just finished our last two-day candle. It ended on the 7th of July. We see the derivative oscillator losing its downward momentum. We see the MACD closing in on a crossover going up, but the market is just stalled. We don't have a confirmed crossover yet. We're still in a confirmed down move since actually the candle closing on the 17th of June. We had, of course, the big down move, the candle closing the 27th of June after the Brexit vote. And then the market tried to recover and is still a green up candle with a long wick on top, a little wick on the bottom. Again, that portends up movement, but it has stalled at about the same spot the market has ended on our two-day candles for the last 3 consecutive candles, which of course represents 6 days. Still in the negative on the derivative oscillator, still in the negative on the MACD. If we look at what happened throughout the day on the 4-hour chart, the market was down 0.06% for the day, up some in the morning, and then what happened in the afternoon is lots of indecision. We have pretty much a doji, a little bit of movement up on a wick, a little bit of movement down on the wick, but the market has a candle that's almost a cross. Again, very close to a doji. That means lots of indecision. What's happening on the shorter chart? Well, it's losing its upward momentum. And we see the MACD and the signal line coming together. What is going to happen? Well, it's continued to stall. We want to see what happens on Friday because we just don't have a call yet. Remember, we don't guess at what the market's going to do. We let the market show us what it does. And when it shows us, we then follow that. What can happen? And what would actually give you the most possible trade if it did happen? That is that the MACD on the short chart crosses over going down. That is then your entry point for getting into a down move to parallel the down move that's been taking place in the two-day chart. What could happen? Well, it could also go up and cross over going up, and then we would go from a confirmed down move on our big chart, which is again our trend setting chart, to an up move, but we don't have that yet. And with the stalling pattern we've been seeing for the last 3 two-day candles, that's over a week now, we don't have a lot of hope in what's actually going to happen there. So continue to watch and monitor. That's what the total market's doing. Now let's look at what the S&P 500 is doing. It technically was down 0.06% for the day. It's getting close to crossing over going up on the MACD on the two-day chart. Derivative oscillators losing its downward momentum. Hasn't yet crossed over. If we look at the 4-hour candle, what do we see? Even a bigger doji in the afternoon. Very little price movement between the opening and closing on the Heikin Ashi candlesticks. Actually more of a downward wick we see. Upward movement in the morning, but then that doji in the afternoon. We do see derivative oscillators continuing to lose energy, and the MACD and the signal line are still moving about. Well, they're getting a little bit closer, but not real close to crossing over. If the market opens up and moves down considerably during the morning, you might find an entry point in the afternoon. Now, those of you who don't really understand what inverse funds are about, we always look at the S&P 500 via the SPY chart. If we look to make an inverse move, that means that the market itself is going down, the S&P 500, those 500 big volume stocks. There is another fund called SH, that is Sierra Hotel. What is SH? Well, it's the ProShares short S&P 500, which means it goes up when the market goes down. So if the market itself, the S&P 500 market index goes down, SH is something you can put your money in to watch it go up. For those of you who are doing what we talk about, doing your trading trades, that is when you would look to do a virtual buy of SH, which closed today at about $39.65 a share. And again, it moves up in a 1-to-1 ratio when the market itself, the S&P 500, moves down. It's not a leveraged fund. Some are. Some move it twice or even 3 times the difference. But this is a non-leveraged, it's just an inverse fund. So keep that in mind. That's a more sophisticated way you can make money when the market moves down, safer than dealing with options, and of course much, much safer than going short in the market. Now, we will lastly go back to our 2-day chart before we move on to gold. We're going to go to the Qs. What is the Qs? That's the NASDAQ 100. What do we see going on there? Well, the NASDAQ 100 has continued to move up. It was up for the day 0.3%. Now again, S&P 500 down 0.06%, as was the total market. But the Qs, the technology stocks in the NASDAQ 100, were up 0.3%. I will tell you, though, as we look at the charts, we still haven't seen a recovery as great as the move down started after the Brexit. That was on the Friday, and then the following Monday, the 27th of June. So we still haven't recovered from that. So there still is some stalling out, but the Qs did move higher and is much closer to crossing over going up. Hasn't occurred yet. Derivative oscillators also getting close to crossing over going up. If that occurs, then of course we have a confirmed up move. We do have 3 2-day candles moving up on the 2-day chart for the NASDAQ 100, and those are green open box candles, but again, they've sort of stalled. The highest of the highs was back on the 1st of July at 108.40, and we had the close on our Heikin Ashi candlestick being below that by about a quarter at the end of the day as far as our Heikin Ashi candlesticks went on the Qs. Now, technically, the price I'm looking at right now, 108.62 is where it actually closed. We have different closes, again, using the Heikin Ashi. If you've not listened to our Heikin Ashi candlestick training, please make sure that you do that at chartingwealth.com. Let's look at what went on intraday on the Qs. We saw that there was lots of up movement in the morning and then more up movement in the afternoon, although that was a red open box candle. It means indecision, not as much as a doji, but it does mean indecision. And we see derivative oscillator lost a little bit of energy, and the MACD and the signal line remained about the same on the 4-hour chart. So again, watch, let the charts tell us what's actually going on. And remember, all 3 of our indexes are still confirmed down moves on the big chart, and they have corrected, that is, they've pulled back going in the opposite direction, which is up on the short chart. If they roll back over and start moving down, that is your entry point for a down move. Down moves as far as funds that you can get into on the Qs, PSQ is actually a short, a ProShares short. It moves in the opposite direction, 1-for-1 with the Qs. So again, that's an inverse fund that you can get into if indeed you have a confirmed down move and you want to try to get into a down move on the Qs. So now we're going to go to our 2-day chart and take a look at gold. Gold was down 0.38% for the day. We look at our Heikin Ashi candlestick. It doesn't look like there's much of a down move because, again, of the way the Heikin Ashi candlesticks, the average pace is what that means in Japanese, are actually figured. We do have a bit of a wick on top showing some of the withdrawal. We see that the derivative oscillators continued to move up even with that down move in gold on the 2-day chart. And the signal line and the MACD line are still about the same distance apart, so they're not really converging at all. Still well above the 2-day trend line. If we look intraday on gold, what do we see? And again, gold in a confirmed up move. We see that gold is losing some of that energy. At the end of the day on the 6th, there was a red open box candle, a red close box candle in the morning with virtually no up movement, a down wick, and then indecision at the end of the day with a green doji. So gold is getting closer. Derivative oscillators losing its energy. Looks like it's getting closer to moving down. So continue to watch gold. If you jumped into gold back sometime where it crossed over, hopefully you were paying attention to what was going on in the afternoon on the 6th and in the morning. Be careful. You want to look at taking some profits at this point. You don't want to lose everything if indeed you get a strong pullback in gold over the course of Friday. Now, again, we appreciate you being with us every day, listening, tracking these charts, learning how to read a stock chart, how to enter into purchases and investments, trades on these 3 index funds and gold. And we just encourage you to continue doing this training. We got a lot of good training at our website, also at our YouTube site. We also have Facebook and Twitter. All of those can be found under Charting Wealth. Of course, the website chartingwealth.com. We love to hear from you. We appreciate you being with us every day. Again, we just ask about 10 minutes a day. If you stick with this, if you follow these charts, if you track them, if you practice these trades and reading these charts just a little bit every day, this will come to you. It is not easy, but it is worth your time, your investment of time, because that's really all you can do to learn this, is to study it, listen to the trainings, watch these charts every day, do practice trades, and get good at this. We're not a stock calling service. We're an education firm. We don't give you investment advice. We want you to learn how to read these charts and eventually start making your own decisions when you get good at this. Okay? These charts are roadmaps to riches in your future. Please keep practicing. Please stick with it. At times you'll say, what am I doing? I'm not getting good at this. You have to stick with it, because I tell you, it is truly gold if you will just stick with it and learn this. Develop your own methods of trading based upon your time, your energies, and just keep at it. It will come to you, okay? It will come to you. Thanks so much for listening. We appreciate it. If you appreciate what we do, go to YouTube, go to our YouTube channel, Charting Wealth, and subscribe to our podcast. We are getting closer and closer to 1,000 subscribers. Thousands listen to us every week, but once we hit 1,000 subscribers, we'll be able to do proprietary broadcasts right to you. So that is an added benefit if you'll come and subscribe there. Additionally, if you go to iTunes, you can subscribe to our audio that's produced every single day the market is open. Plus, we have our weekly review and forecast that's provided there. Give us a 5-star rating. That would mean a lot to us, helps us in the metrics, and subscribe there at iTunes. Also helps us. We appreciate you helping us to be, I think we're number 7 as far as the top stock market podcasts in the world, and that's thanks to you, and we will continue to deliver quality information. We just ask your help and support. God bless. Thank you so much, and stick with this. It will work. It will come to you, and you will look back and say, I'm so glad I did. God bless. Take care. From chartingwealth.com.